Hey everybody, Andy Moss here, tradingadventures.com with another look at the markets here for an update this evening. And the story remains the same, and selling is getting deeper. So I thought we'd dig in again and look. The first thing we want to point out is the continued series of lower lows and lower highs on the SPY and the NASDAQ. You can see the SPY here in the upper left quadrant. As we are in a short to intermediate term downtrend here, and I want to get right to the lead on crypto is just absolutely getting demolished. You can see this is a 2-hour time frame on 4 of the major cryptocurrencies: Bitcoin, Ethereum, Solana, and Ripple, and just a cascade lower. And if we go over to the daily chart here for a second, look at this candle here on Bitcoin today. Huge volume. Prices down as much as 12.5%. Currently getting a little bit of a bounce here in the late evening, afternoon hours. But crypto cut in half from the highs up of over 126,000 back in October. More and more areas of the overall market. If we look at the indices, and this has been a theme that we keep revisiting, is the fact that how can all this be going on with the S&P still so close to see SPY? If we go off of this recent little peak here, that's not a closing high, but P's. And so that is a show of resilience on one hand. See what else we're noticing as far as rotation and breadth and where the participation is and what sectors are leading and what ones are lagging. And so just to revisit the sequence here over about the last month, we've been seeing little hints and clues show up repeatedly, starting about a month ago with the article pointing out that the Magnificent Seven was a bit of a red flag. We had very healthy internals in the market. We had strong breadth. We had the percentage of stocks above a 50 and 200-day moving average looking good. We had an advanced decline line that was improving. Everything looked pretty good except for the biggest names and the biggest stocks in the biggest stock market index, the S&P 500. And we noted that maybe the Mag 7 rolls over and drags the market down. And we didn't know what was going to happen. Obviously, you never do until after the fact. But that's kind of what we're seeing here. So after that, the signs kept piling up. We've seen the Mag 7 sell down. We've seen the defensive sectors rise and the top of many chart lists, and energy, materials, industrials, all of those names have been gathering steam as former market leadership pauses. So that back on January the 27th, back on this day, that was a new closing high there, and then it went a little higher the next day before starting to come back down. So it just alone means a whole lot, but as the signs keep piling up and continuing to accumulate, then we can see things on late January's update. We looked at the S&P coming down and tagging the 50-day moving average before it bounced. That was this day right here. And so it was like the sellers were probing the action here. And it got a very strong rebound on that day, but we can see it just kind of came up and rounded over, and then this is where we closed today. So now the S&P is below an 8, a 21-day moving average, which are both declining. It's below a still rising 50-day moving average, the red line here, and it's down testing this area here once again, which is these repeated trips. If it happens once, it's not a big deal, but when you see these types of things continue to happen more and more often, then we start to take more and more note. So now we're standing in a situation where the S&P is down 1.25% today, the NASDAQ down about 1.5%. The Dow 30, which had been really holding this consolidation channel here for a couple of months very strongly, we're below that again, and that's happened a couple of times, and then it goes back over. So the 21-day declining is not something we've seen in quite a while. So we are definitely on guard for more selling from the indices. And then we can look at potential support levels down here. We've got a recent high on the DIA back around 485. We've got the 50-day moving average just above that. But those are all things we're pretty phenomenal bounce over the last 7 trading days or so. And now the 8-day is curling up, and it's moving into the declining 21-day here. And typically we look at that as a rising dollar is a headwind for stocks. And maybe that's having an effect on things right now. Maybe it's not. The bonds CLT has bounced. The yesterday this looked really terrible, and it looked like it was further downside. And so today, with so many stocks and other risk assets being sold, bonds got a little bounce. Who knows if it continues? There's a lot of overhead resistance or potential resistance right here with the declining 50, 200, and 21-day moving averages. And we've got some key VWAPs anchored that could affect things too. So we'll have to see how that shakes out. So looking at the Mag 7 as a whole, gapped higher. Shouldn't say the end of the run. That was the opening of this gap back on September the 15th, which has been revisited a few times. And again, the 50-day is flat. The 8 and 21 days are coming down. And if it doesn't hold this area, it's very likely that we see a price decline at least down into the area of the anchor off of this April low back in 2025 and the rising 200-day moving average here at around $60.35 beneath the surface of the Mag 7. It's a bit of a mixed bag. Apple looked really terrible for a while. Now it looks pretty good. Amazon is gapped lower today and went down to test the 200-day moving average, and then they reported earnings, and the stock's down another 10% almost. So the current after-hours price is 201.21 is what we're looking at right now. So that's all the way down in about this area on Amazon. That's really a nasty looking move there. Google has been to hold up very well. Meta is kind of still in no man's land. It's gone nowhere since the $166.47, and today it closed at $670.21. It just really, look at this huge rounding formation here since the April 21st low. It's given back way too much of this move, and it's well below the 200-day moving average now, and who knows where the end will be for this decline in Microsoft. Nvidia, like the Mag 7 overall there, at a key level here with a rising 200-day just underneath. So maybe it finds some support, maybe it doesn't. Tesla, another similar pattern. This is that gap that we saw on the Mag 7 and the Qs back on September the 15th. And this is a area of some previous low. The benefit of the doubt is with the sellers, not the buyers, on the short and medium term and even the longer term, as we look at several of those names below the 200-day moving averages. Software has been hit especially hard, almost all the way back down to these. AI is eating the software companies. The products and solutions that they have been provided, maybe they're more easily and cheaply obtained now with an agentic AI solution. Who knows what the real cause is there, but the selling has just been absolutely persistent and consistent, taking it all the way down, nearly from 115, 116s all the way down into the upper 70s now. And on the other side of this, there's the staples. People are buying things and those kind of things, materials. We talked about the metals, gold, which has been such a huge momentum play so far this year, and even so strong for so long. And then we've got, that's a 20% correction in 3 trading days. Silver is having another gap lower here today, which is something you don't see very often in the futures market, and it's down 43% here in about the last 6 or 7 trading sessions. So the signs are continue to accumulate that sellers are in control and risk is leaving the marketplace in favor of more defensive assets. So anyway, there's the market recap. How does this, because I know these times are not easy, but if we look at the roadmap like we do every day, this is what we need to see. We need to see an eventual reversal that results in a sequence of higher lows and higher highs. And so maybe it starts right here and it goes back up and takes out this area of recent highs and then stops a decline here and puts in a higher low, and so on and so forth. So that's what we're going to be looking for as our first indication that things might be turning around. We certainly don't see that yet, and no need to be a hero and try to catch bottoms or to buy things on the way down. Watch the indices, watch the names you're interested in, watch for those turns and those pieces of some higher lows, and then first buy overtaking a 5-day moving average. Then maybe it goes up and tests an 8-day moving average, and then maybe the 5-day starts to flatten out and curl up. These are the things that we point out over and over and over again, and it's because they're useful and because that's going to be the early indications that we have some relief. And the good news about all the trades and good things to buy. And there still are opportunities out there if you're selective and focused on the leadership. But right now, the weakness continues to spread. So I hope that helps. I hope you can see what I see in the charts here, and just keep watching the roadmap. I'll keep the updates coming. We will have a look at the big picture weekly charts over the weekend and see what's the message that they are. That's the process, and we'll continue to stick to it. That's the structure. That's what defines the trend. Respect risk first and let price lead. I'll keep the charts coming, and we'll be on alert when things start to change and look better.